we're still looking for long end rates to, I think, move lower as we move through the year, and think that the yield curve will uninvert, but it's going to be more from seeing the short end rates go down faster.
Sure.
And so I think when ultimately, if we're getting a little bit better handle on inflation, not all the way back to 2%, but at least some improvement there, I think just the prospect of Fed easing will help in terms of reducing.
What Damian just said there that Sarah pushed against folks, I'm sorry, it's part of the zeitgeist right now.
Yeah.
There's a whole school of thought out there. Oops, what if yields pop out in a longer duration?
Well, it seems like, the Fed to some extent is managing, the long end of the curve. I mean, we're not going to say there's yield curve control going on here in the U.S.
Is there any evidence that they are able to manage the long end of the curve?
Absolutely not, and there's no evidence that they can do it today. I mean, that's the real gist of it. But, nevertheless, we're seeing some things in the market that are just tough to explain, like growth. I mean, again, and inflation for that matter, not coming off as quickly as we otherwise expect. It's sort of two sides of the same coin. So talk to us a little bit about inflation. We got the CPI print coming next week. What's your focus on that?
Yeah, so looking very hard at the core, just given that you have had 3 months in a row of upside surprises, and we really need to see the core begin to downshift if you are going to keep even the potential of even a September cut on the
Owner's
table.
equivalent rent?
I think we'll see some moderation there.
That's
so
the one.
obviously it's been stickier, and it's been, I think, slower to see that downward trend. But we've already come off the highs. But I do think that there's further to go as we move through the year. It's just a matter of the magnitude and timing. I think has been tricky to pin down. But the direction, I think, pretty confident lower.
Well, I think that's the real one, right? I mean, that's what the Fed's waiting for. And I think, if you just look at Steve Englander at Stan Chart this morning, he's talking about the potential for OER to fall in the second quarter this year. And that might be what Chair Powell is indeed hanging his hat on. I mean, what else could Chair Powell be hanging his hat on? In last week's meeting, he gave 3 scenarios about where the Fed's going to push rates, and all of them were either on hold or lower. So no one seems to be talking about hikes. But then when pressed in the presser, he didn't necessarily deny that people aren't talking about hikes on the committee. Talk to us a little bit about your takeaways from last week.
Yeah, so I think obviously Powell put a dampener on the possibility of hikes. I mean, I think you can't ever completely rule them out, but it does seem like there's a very high bar in terms of whether the Fed would actually step back in. I think the more likely scenario is you just see the cuts keep getting pushed out. So I think if you do see inflation stickier, jobs market remain resilient, I think that's the more likely play, where they're not sure exactly how restrictive they are, but they can sit and wait longer to feel the effects and see if there are longer lags.
For Business America listening across the nation right now, what's the animal spirit, Judge? Where's nominal GDP 12 months forward?
Yeah, so I think it's still going to be pretty strong. So
5-ish?
I'd say probably closer to 4.5, 4.5.
But
if you
still,
have
that's outstanding.
If you still have 2.5 or
Okay,
2.25, 2.5 inflation,
rip up the script. Why are we so miserable with 4.5% nominal GDP? The Knicks are winning, and we've got 4.5% nominal. Explain.
Knicks are winning, but the Hurricanes are down two games to none to the Rangers. So that's why we're a little depressed in Carolina right now.
No wonder Scarlett didn't show up today.
You know why we're depressed? Because the Knicks are winning, and you can't afford a ticket.
No, Sweeney's the only one. But continue. Why?
I think that
why does the nation feel so? There's a weight upon them.
I think it still is the inflation environment where, yes, we've seen improvement in terms of the rate of growth, but prices are still roughly 20% higher than they were just 4 years ago, and it's still difficult to digest. Businesses and consumers are still having to think about their pricing decisions a lot more than they were accustomed to only a few years back. And so in some ways it doesn't matter that real wages have kept up if it doesn't feel like you're growing in terms of your wealth.